What's up, traders? Welcome to another C-Space trading video. As always, I'd like to welcome my subscribers. Thanks very much for subscribing and following along as I continue to put these videos out. Don't forget to comment below if you have any questions, and also click that alert. When I put these videos out, I'm putting out a couple videos a day. You'll get alerts and notifications on your phone that I have put these out, so you can go ahead and check them out to see if it is anything valuable to you and help you make you a better trader. So let's go ahead and get into what I want to discuss in this video, and I want to discuss a strategy when it comes to swing trading or day trading or however you want to trade it. But it is a valuable strategy that some people have had success with. It's not 100%, no strategy is. However, it does come into play quite a bit, and some people's made money off of it. Just depends on how you trade it. And what that is the EMA, which is the exponential moving average of 9, crossing above or below the EMA of 20. I don't like to use a simple moving average. The reason being is it kind of moves it out a little further, and you don't get the alerts quite as fast. And I'll show you here soon. So what I'm looking at here is the EMA of 9 and the EMA of 20. I'm going to zoom in, and the 9 is the yellow line you see here, which follows along the chart, and then the 20 is the red line. So an uptrend is basically when you have the 9 cross up over this red line, which is a 20. When the 9 crosses a 20, usually it's a good time to go long. Now, yeah, you'd like to get in here to go along, but you always need some type of confirmation. That confirmation could lie somewhere here. So when this crosses up, if you can get in on a pullback where it comes back down to the 9, this would have been a good entry to go long here. Now this is the daily chart, so this would have been a nice swing trade. So if you could have got in here, played options, or just got in at 276 with a large account, you could have rode this up until wherever you'd like. Some people like to get in when it crosses and then get out when it crosses below. That just kind of tells you when you're in an uptrend and when you're in a downtrend. Just sometimes it gets a little choppy like here, and you could lose out. So this goes along with any type of trade. Like I said, day trade works as well. I'll zoom into the 5-minute chart here shortly, but I did want to show you another one here. If we pull on back here, you've seen it, the 9 did cross the 20 here, and then you have an uptrend where you could have gotten in like that around 268, and rode as high as 278. It's 10-point swing, which is huge. However, it's not always 100%. If you would have went short here, you would have gotten in around 271 going short, and this would have been a losing trade. So like I said, it's not 100%, but it is a strategy that some people use and use quite well. And let's go ahead and look more into the day trading side and look at the 5-minute chart. So today's 5-minute chart is probably not the best. Let's see, so it did cross here. Cross here from the gap up from the close yesterday, and so if you would have looked at this and would have liked to get in on a pullback somewhere in this mark, that would have been a great time to get in long, especially if you're playing margins. You could have got the 283.50 call, which at the time here you would have got in on one of these pullbacks. Let's just say you wanted to confirm and you wanted above the VWAP, you could have got in at 283.09. The 283.50 call that expires tomorrow, August the 15th. You would have got in here. Let's just say 60. Let's say you would have got in at 62 cents. So that means if you had bought 10 contracts, it would cost you $620. You could have rode that out for 5, 10, 15, 20, 25, 30 minutes. And got out at $1. So that is a huge, so 62 cents to $1. So $620 you could have flipped into $1,000 by playing this cross up within 30 minutes. So that's why options could be a great tool for small accounts. However, they can be dangerous. And I will point this out on, let's just go back and see where it could have flawed, just so you know that it's not 100%, that it could burn you a time. And if you're looking here, it's been so far the last couple of days, it's been a great strategy. You could have went short back here, and it would have been good until it crossed. You could have went long here, and as long as you got out. Now this is the thing, you got to know where support, you got to know where resistance is, you got to knowing this 284. That's why I would have got out here, is because you would have been approaching this 284. So keep all of this in mind when you do these strategies, where the support's at, where the resistance is at, where the likelihood of it pulling back. Especially if you're trading options, you definitely want to get in and get out as quickly as possible. Let's look at the 15 to see if it's any more clear. You have the yellow crossing the red, which is 9 crossing the 20 here. Same movement I just spoke about. It would have crossed down here. You could have got in here. Let me see if I can't find a good put. Let's just say that it would have been at 284. Let's just say the 284 put here, expiring tomorrow, which would have been a play for yesterday, possibly. So if you would have waited for the 20 to cross the 9, that would have been, or 9 cross the 20, that's a downtrend. Let's zoom on in here and see what you could have got in. You would have gotten in on this put, but you would have confirmed it around this point. This put would have costed you, let's just say $1.60 to make the math easy. Write it down. You see this mental block here at 282. Always be cautious of these numbers. So 282, 283, 282.25, 282.50. Be cautious of those segments or increments. So you would have got in here right before the drop. It would have costed you $1.60 or so, and you could have rode this thing down all the way. Let's just say you wanted to get out as it seemed to be plateauing here, $1.60 to $2 and just say 37 cents, 35 cents. So that's a 70-cent swing. So that's an easy, if you just spent 160 bucks for one contract or one put there, you could have made 70 bucks in about an hour and a half. So maybe a little longer than that. See, 15, 30 hour. Yeah, hour and a half time, you could have made 70 bucks. Or if you'd have bought 10 contracts, you could have made a lot more than that. So options are great. Just put this tool in your toolbox for when you may want to trade it. Just look for that EMA of 9 crossing above or under the EMA of 20, and that should give you a telltale sign on which way the stock's heading for the next little bit. Hope you enjoyed it. Hopefully it's useful to you. Hopefully you can make some money off of it. Just be mindful of these mental stops and be mindful of your support, be mindful of your resistance, and also keep in mind the news. If the feds are talking or anyone's talking, I don't like to trade when news may come out to affect the market, so always be cautious of your news as well. If you have any questions, please comment below. If you hadn't done so and you found this valuable, please subscribe, as I will continue to be putting more of these videos out in the future. Once again, you guys have a wonderful day, and I'll speak to you later.